Me, along with my friend Sunil Singhania, welcome you all to this very special Diwali show. We are very excited to face not one, but the entire editorial team to bring you the best of content over the next 1 hour. I hope all of you enjoy. Thank you so much.
Happy Diwali in advance, and we look forward.
I think we should
Amazing! Amazing! This is so good.
both
Madhu and Sunil.
Happy Diwali to both of you.
Happy Diwali. And I think this feels great. You know, we're going to now start looking at you more like co-anchors and then, you know, market guests. But thank you so much for coming to us, to our
Actually,
studios.
that doesn't take away the
absolutely.
fact that
I
they've been
want
market
to
veterans.
wish first Happy Diwali, and I also want to acknowledge, and Sunil will agree, you know, we have of course grown professionally and also made money, but I must acknowledge you guys have played a significant role in really making who we are. You know, when I go to an airport and when a promoter comes and approaches me, I know it is because of my interviews of CNBC TV 18. So from bottom of my heart to all of you, thank you so much for being the friends you have been, and it's been delight to come every year. It's a ritual to come to CNBC and celebrate Diwali.
You know,
That's very generous, and I must say,
you're very
It's
generous.
really mutual, and we want to thank you as much as well.
And also the fact that, you know, because you both are sitting here, you are the ones who actually sow the beads, sow the seeds of what the retail evolution, what we're seeing right now. I know you've been sharing those stories of how you used to go to every remote place and sell that mutual fund, you know,
the concept
20 years
of equity,
back.
exactly.
And now you're actually seeing that fruits, everybody can benefit
friend,
from
the
it.
trees grow.
Everything needs a platform,
Absolutely.
and we are thankful for this platform.
It works both ways, absolutely.
No doubt.
All right, so there's plenty to talk about. This is a special edition of Editors Roundtable, and it's going to be a full 1 hour. So let's kick start. Well, it's been a very strong Samvat 2018 with the Nifty clocking gains of nearly 25%. And of course, mid caps and small caps have done even better over the course of the year. In fact, here's a bit of an interesting trivia before we start off. This Samvat, I mean, the one that's closing now, 2018, the Nifty on an average has hit a record high every 3 days. Every third session, we've made a record high if you sort of, you know, average it out. Hello and welcome to a very special edition of Editors Roundtable. Over the next 1 hour, we will decode the big near-term triggers for the market. We will also put the spotlight on a lot of the wealth creators and the wealth destroyers of the year and what the going forward story is for both of them. And then we will celebrate the retail revolution that's been the hallmark of the last 12 months. I'm Surabhi Upadhyay, and with me, as you can see, is a star-studded panel. We have our guest editors, our experts in the house, Madhu, Kela and Sunil Singhania. And of course, as always, the star team of CNBC TV 18, Nigel, Nimesh and Prashant. So looking forward to it, guys.
Oh yeah, absolutely.
That was the intro after the intro. That was nice. But how's that Samvat 2080 been? I mean, as you reflect back.
I would say last 3-4 years have been brilliant. Why only last year?
Absolutely.
Post-COVID, one would have never thought that the biggest opportunity of wealth creation lies in COVID, right? You know, because I think the prices fell to such abnormal level, and people thought that this problem is going to last for much longer. You know, but world came together and the problem got solved much easier, much earlier. So I think last 3-4 years has been, anyone who has been in equity market would have been really fabulous, unless you have chosen really not to make money. It was difficult not to make money.
But now is it going to be difficult, Madhu? We've seen the last 3-4 years, but looking forward, will now it become more challenging to make money?
No, say Nimesh, if you look at the last 25-year return, finally return tend to come to the mean
average.
Right? And we have seen lots of bull runs and lots of bear runs. Final return of last 25 years is 15-16%.
Yes.
And we know that last 3-4 years, these returns have really far exceeded that long-term average. So today, you know, I don't want to sound cautious or bearish. This is not a day to really sound cautious or bearish. However, I would say that, you know, if you are coming in the market now, please do not extrapolate what has happened in the last 3-4 years. Do not make your expectation that otherwise बहुत सीधा simple है निमेश मेरे भाई. वो व्यापारी को जिसको हम पैसा देते हैं वो 18-20% आरओई कमाता है. और हम इतने स्टार है कि 40-40% साल का कमाएंगे तो देयर इज सम डिस्कनेक्ट समवेयर, राइट? So this kind of thing is not going to last. So I think India from a long-term perspective still remains very, very promising. But whoever is coming has to take a long-term view and should have really moderate return expectation going forward.
Your take, Sunil?
No, I think I completely agree. But just coming to the last 1 year, frankly, last 1 year was a year which surprisingly turned out to be very, very good. But if you actually see, it was full of uncertainties and massive uncertainties.
Yeah.
You know, we had elections in India,
The
we
war
had
going
multiple
on.
wars.
Yeah.
You know, you had this yen trade going up and down, and so many other things. So I think that clearly points to the fact that India's resilience as an economy is only getting highlighted more and more. So irrespective of whether we make superlative returns next year or in the next 3, 4, 5 years, I think the good thing is that Indian economy has never been so resilient, so stable. And I think that gives us the optimism that this move from 4 trillion to 8 trillion and onwards is definitely going to be there. Now it's all upon the investors to ensure that they don't get carried away and stick to this mean return which Madhu mentioned of 14-15%. I think we are set.
So you gentlemen spoke about, of course, we're not trying to be bearish, but we're just being realistic here because I think a little bit of self-awareness is always important, and Diwali is as good a time as any to sort of look within and look at your portfolios as well. So when you gentlemen now look at the near term, let's say the next 12 months, and when you think about perhaps headwinds or speed bumps or challenges, सबसे पहले दिमाग में क्या आता है? Madhu, you want to take that first?
तो पहला तो देखो, there are 2 or 3 next 2-3 month event. I think outcome of US election to a large extent will also set up some kind of a tone, right? If Trump comes up, then you will have a massive stimulus from China, right? Because they would know that there is tariff war, etc. Because this is not about economics between America and China, to my understanding. This is now about being the superpower, right? It is about some kind of a supremacy in the world.
The Chinese maybe in fact have held back from real cash stimulus because they want to see what's the electoral outcome.
Clearly, I have no doubt in my mind. So that is point number one. Then you have, a small event in Maharashtra election, which way it goes. And plus also in the very near term, you have had 1 lakh crore rupees of foreign selling, which everyone talks about. No one talks about 1 lakh crore rupees of domestic buying.
We talk about it every day.
So
We highlight
the question is that are we expecting another 1 lakh crore rupees of foreign selling in this month or in the next month? I am not expecting that, And Surabhi, while we are all in a way quoted little cautious, the fact is that we are not only 2 people who are cautious. All our 50 friends who are wise, they're all cautious, they're all sitting on cash. There is absolutely no leverage in the market, So that, in a way, that is why, regardless, it's a good thing, but regardless of what comes, that's why the markets are not falling, disproportionately. When it falls, it looks like abhi ho gaya karke, but hota nahi hai.
because excesses perhaps have not been built up what we saw in the earlier bull runs despite the elevated levels. Maybe we've kind of kept the
And one
guardrails
thing
in
is,
place.
markets are self-correcting. So wherever there is real excesses which are being built, let's say select defense names or select railway names or select PSU names, by and large, there's a deep correction, like 30, 40,
All these
50%.
mini bubbles have kept popping.
Kept copying, exactly.
So that's good.
Exactly.
At times people tell me that among all of us, I wasn't on television in 2008. So Nigel, you didn't see that pain. But there are a couple of things that are different. The retail money wasn't so strong in 2008. So when people tell me that, and also balance sheets of corporate India, they weren't in the shape that it was in 2008. So that's my defense. And as always, most of what I earn goes into equities, in terms of my SIPs. But that said, let's get Prashant. And Prashant, you got a piece for us in terms of how you're seeing trade setup?
I think Madhu gave us a sneak peek of the US elections. For our viewers, we promise this is going to be long term, but let me get the very near term out of the way, right? Let me go across to the wall and just sort of put some of these out. So November is going to be important because you've got, as Madhu was saying, US elections, but you've got a couple of other things as well. So the dateline will come up on your screen. Tomorrow you get the jobs data out of the US. Then you get the China NPC. And then you got election day, which is 5th of November. Result day. I mean, will we get the result on 5th? We don't know. And then, of course, you got the Fed decision, which is the 7th of November. So this is, the lineup of events. Later, of course, you get the state election results as well. But I'm just focusing on these global things. 2 points each. US jobs data, still remains the most important for the pace of Fed cuts. We got the first cut, which was deep, 50 basis points, but now many stalwarts are saying maybe that was a mistake. The Fed is tied to its forward guidance. They've said they have to cut, so they will cut. But the data is going the other way. All the data which we've got till last night is all strong. So, we'll see. Remember, last month, after the 50 basis point, the September jobs data came, which was much stronger. So this one now will tell us, tomorrow's data will tell us whether September was an aberration or something else. Does the market need to reprice expectations of what the Fed will do? Now I come to US elections. We'll talk more about this, but very quickly, the Electoral College and how they decide the president depends. Essentially, it comes down to 7 swing states. Pennsylvania is essentially the key state because it's got the most number of electoral votes, and that's key to winning the US election. Expect most news networks to so-called call the US election by, for us, it'll be Wednesday, 8:45 in the morning. So, we'll be air on Bazaar, and I think around that time, news networks in the US will call the election. There could be, there have been contested elections as well. 2020 is an example. So it's possible people go to court. The Republicans or the Democrats go to court and we don't get a clear verdict. But historically, recount has not changed the outcome per se. So that's essentially point number 2. Then you got China, NPC, right? And this is important because China has very smartly deferred this to happen, to coincide, or actually they want to wait and see what the result of the US election is, as Madhu was also saying, and have the flexibility to respond to a Trump victory if the need be so. This is a newspaper which said that Chinese policymakers plan to mitigate any potential impact of geopolitical surprise, and they could announce a much bigger stimulus if a Trump win intensifies headwinds for China. Remember, he's threatening big tariffs, etc. 60%. We'll know if that is just election rhetoric or this is something actual. And of course, we get to the FOMC. By the time we get to it, I think a lot more things will be clear. But for now, markets have not changed their consensus expectations of a 25 basis point rate cut. They still think that a 25 basis point cut is what we will get. Madhu, just to wrap up this point, for India, what does it mean? You said that if Trump were to win, and markets are looking like Trump perhaps will win, the way yields are higher, dollar is higher, equities are up. But what does it mean for India? Is it automatically positive if it's negative for China? Does it mean it's positive for India?
Economically, I would argue it is positive for India.
Okay.
Because, that whole rhetoric of China plus one really gets momentum. And that we are seeing in a lot of businesses. That is, whoever I am speaking to, whether you're speaking to in the pharma sector or you are speaking even in energy sector, that the boom which we are seeing today is a result of China plus one. Because, those guys are not buying directly from China. So there is a window of opportunity which has opened for India. So I think economically it will mean good outcome for India. I don't know geopolitically what happens, because if you put really like 60% tariff on any country, how they will respond, and they have the right to respond in any manner. Last time when COVID happened, there was a conspiracy. Is there some unseen hand in the debacle. So we don't know how nations respond.
But what about markets?
Markets will be positive, I think.
Positive.
Markets will be, short term will be positive. Trump victory has always been positive.
Emerging markets also, not just US, but emerging markets.
Emerging markets should also be positive, according to me.
Sunil, apart from the US election, which Madhu spoke about,
in the short term.
there are a couple of other things as well to watch out, right? Our own state election outcome on 23rd of November. We have the MSCI as well. We saw a massive selling from FIs in the last 1 month. What are the few things that you'll be watching? Very near term, what are the few things that you'll be watching out for?
No, so I think I agree that state election will be watched, very, I would say, intensely.
Especially after the Haryana surprise.
Yeah, and if you remember, that Haryana election sort of ensured that the market did not collapse, because that was one of the reasons why the market sort of got its feet together. So I think sentimentally it does have an impact. I don't think it lasts for a long time, but it does have an impact. I think from my perspective, near term, earnings have to now rebound in December and March.
So I wanted to ask you that, this quarter was a bit of a challenge, right? But Was it a one-off quarter, or you think it's a structural
No, so
slowdown that you're going to
if you actually see this week, the week starting from Monday, the earnings were pretty decent. And that's why the market has sort of, you know, stabilized a bit. You know, you had banks which did very well, PSU banks which did very well, and then you had, you know, obviously Larsen which did very well. You had some positive news coming in from a couple of pharma names, and I think the market stabilized. Otherwise, still last week, the result season was disastrous. So it's not as bad this week, and hopefully, you know, at least our interaction with companies point that the last 2-3 weeks, there has been some sort of, you know, movement in terms of consumer demand also, in terms of government spending also happening. If you would have noticed, you know, the fiscal deficit is only 29%. Normally by this time it is like 70%. So the government spending has all got deferred. So I think what will be watched in the near term.
This was the first month where we saw a bit of an uptick in the government capex as well. So I think that's the belief.
December and March quarter becomes very crucial from an earnings perspective. I would say more than Trump and all, I think that would be a bigger factor.
Absolutely. We noted that actually this morning as well, that this fall in capex, which is why the deficit numbers are looking better, whether that government capex kind of push can come in, and then private capex is anyone's guess right now. That's an open question. We do have to take a very quick break on that note. We come back on the other side, the conversation continues, and then we talk about the retail revolution. Really need to sit up and celebrate the retail investor for the resilience that he and she have shown. But will that resilience continue? That's the big question. We come back with that in just a bit.